Hello, everybody, and welcome to our midday update for September 28th of 2016. This is George Papazov from Trade Pro Academy, owner, founder, and head trader here. I'm going to walk you through a quick little update of the markets, what they expect going for the rest of the week, what some of the things in the key levels are at play here. I'm excited to share it with you. But before we begin, I have to share that this information is for presentation purposes only. It's education. It's not investment advice or solicitation to trade or buy any securities. The risk of engaging any market, trading, and or activity is at your sole discretion. We are not responsible. All right, now that the lawyers are happy, let's get started into our update today. All right, first and foremost, we started off with a very, very busy session in terms of news flow. And it's not economic news per se that kept us busy for the Wednesday, but it's mostly a lot of Fed speakers. So Janet Yellen at 10 a.m. hit the wire and she was testifying. What did she say? Nothing. In fact, she was mostly talking about bank stability and regulation, didn't even touch on monetary policy. So that was pretty much a miss as well. In terms of what was said at 10 a.m. from FOMC member Bullard, as well, there was no monetary policy discussed. Mario Draghi at 9:30 in the morning Eastern was getting grilled in Germany. Nothing came out of that as well. So there's a lot of chop. There's a lot of noise. Core durable good orders at 8:30 in the morning came out slightly better than expected, all right, on the durable goods orders month to month. On the core, it was a little less worse, but they're still not good numbers. So all in all, the economy remains rather weak. The market is strong based on a lot of artificial stimulus pumping it up. All right, we got some more Fed speakers here. FOMC member Messer speaks at 4:35, and at 7:15, Esther George will hit the wire. So there's some more Fed speak coming up after the market close. The rest of the day should be pretty smooth sailing. Okay, let's have a look at the markets and what they've done on the equity front. And if you guys have any questions, I think I've opened the chat box here for everyone on YouTube Live as well. So if you want to pop your question there, feel free to do so. All right, here's what we're looking at. We had a really good run here from end of June to about August 15th to mid-August. All right, nobody could do any wrong. The market was going up. We alerted our members at Trade Pro Academy that there's a bit of a rising wedge happening here, which caused some sideways price action. Eventually it broke out, but it's now consolidating again. So where are we? Well, you could see some consolidation price action coming into the middle of this range. All right, we've had 2160 on our chart on the index for an extremely long time. A lot of battles happened here through late July, as well as late August to early September. This low was tested, on which it rallied. From there, the markets broke that support, came through, formed the double bottom at the 2120s, broke out, but now is back right at it. So what we're seeing here is a confirmation that this 2160 is a key level. All right, very key level. It just broke out today. What happened? That price got faded. At the same time, the market's kind of going sideways, and especially when it was going up, momentum was giving us a sign of divergence. When momentum's weaker as the market goes up, that means there aren't as many buyers. That means, yes, the price is still holding high. There aren't a lot of sellers, but there are no new buyers either, which starts to signal at some point some of these guys that bought or gals are going to start to offload those positions. And here's what started happening in that cycle down. Okay. When the FOMC, Janet Yellen came out and said there was no hike, it was 2142.60 on the index. And we've pretty much came in and tested this level. It acts as support and we've bounced higher. Now we're pinned between 2140 and 2160. Those are your levels that you definitely have to keep an eye out on your chart. From a technical perspective, this 100-day moving average caused a bit of a bounce. It's coming back down into it. You could even draw a trend line and say it's still bullish above here, and that line coincides with 2150. Okay, so am I a buyer? Am I a seller? I don't know yet. I'm going to let the price come to me, but I'll tell you one thing. If it gets back down to 2140, I'll be a buyer up into the 2160. Here, I got to be a seller. Every time it's 2160, I got to sell into this market. Now, should we clear about the 2162 to 63 level? We got all systems go and green lights up to 2175, 2185 likely, and then up there it's going to meet significant resistance. When Hillary was speaking in the presidential debate this week on Monday, markets gave her the win. They said, hey, what you're saying makes sense to us. Why did they like Hillary? Because Hillary represents the status quo, right? Hillary is everything that the market is right now. Donald Trump is an unknown. All right, and I'm not going to get into politics, but that's how the market interpret things. So because they've been pumped up on assets and quantitative easing, and Donald Trump's openly said, I don't like this Fed thing. I think Janet's a bigger politician than most politicians out there because that's uncertainty. If he wins, who knows what's going to happen? I think market will take it as a negative. Whether the market's right or wrong, I don't know. That's not your job to decide that as a trader. Your job is to capture that momentum and make money off it. Remember, traders often try to be right in their trading, and that's not what we're here to do. We're here to make money. Okay, you're not here to be proven right. If you want to be right and be awarded for it, go try to get a Nobel Peace Prize or something. Go become a PhD. Go become a professor. Teach people. Do research. Do something meaningful in society. In trading, it ain't a place to be right. Okay, you don't want to be right. When you're right, great, but focus on your analysis and levels. 2160, very important level. 2140, super important. You guys better have that on your charts. On a 15-minute time frame, everyone said, why did it stop at 44? Well, look what happened here through September the 16th to about the 21st in the morning. Ton of volume got let off here. See this? Price went down. It was in a range, cycling through this range. All you had to do is sit tight, establish this range, establish a point of control here on this day, and buy these dips. And when it came into the range, sell these rips. Okay, if you tried to sell it here, great. All right, if somebody said I sold this level based on the fact it was a range, all right, you know what, phenomenal, but you better cut your risk here or here. You better still not be short for this thing. All right, and then from here, you convert it to buying strategy. Now he comes right back down, gives up these, well, you shouldn't have shorted that because that was FOMC. It comes in here, gives up all these FOMC gains, taps that level, and price moves on up. So where do the prices like to find support? In zones that were previously tested. Why? Because there's a lot of invested and emotional capital in these levels on the charts. All right, think about being the guy that was short in any one of these boxes on the S&P 500 who got stopped out and had the price handed to him. What happens when it comes back here? You're going to say, hey, I'm going to maybe try it short again, which now becomes to accumulate more shorts. On the upside, there goes some buy stops. So it's a cycle of traders that want to be right, losing money that we capitalize on. For those guys that are trying to be right and fighting the trend, those are the guys that we need in the market to give us their money. Here's here's how you trade this thing. So it comes in, think about being along in this zone and not being a retail trader, okay? Not you and I with the smaller accounts. I'm talking about the institutions with a ton of volume that need to be buying. Think about this. If they bought through the 19th, about the 22nd, and price started to come back down, what do you think these guys are going to be doing again? Who wants to pop a comment in there? What do you think they're going to be doing? They're going to be buying. They're going to say, hey, it's right back to the price I had it at. Let me buy some more. All right, where do you think they're wrong? Well, they start to get nervous below a support zone where they've bought and they've said, all right, I've bought again. Now I'm more invested. They start to get nervous below 2140 because that's where they puke. For those of you that watch South Park, that's where they pull a stand when they see Wendy. It just pukes right below 2140. I haven't watched South Park in years, but I do remember that analogy. All right, so watch this zone. That's your level right there, 2140. Super, super important for the longs. If we start going below there, what's going to happen? Let's go on a 4-hour chart. All right, no, let's go on a 1-hour chart on S&P 500. What happens if we go below that 2140, which is down here? Well, then all these guys that were now long and in through here around the 2112s on these lows of the moves are going to start to get nervous because price is coming closer and closer to them. And guess where support will be? Well, 2140 breaks, it's going to be right in the middle of this cluster, 2126. And the same pattern repeats for the buyers. We bought it here. We had a nice run. It's coming down. I'm going to buy more. Where did they puke? Well, they puke below this low. And there's an accumulation of sell stops below these lows here. And as you go down, the more and more sell stops that accumulate, it's accumulation of buy stops above. That's how you got to trade this thing. The market will move in the direction that causes the maximum financial loss for the most amount of traders. You got to remember that. That's how the market moves. It ain't a friendly game. All right, so on the 15 minutes, what do I see for the rest of the session? I see price coming back down and trying to test some of these points of controls at 2150. Okay, we're 5 points away. We'll probably try to test it, but there's no economic news. So don't be surprised if we hold this previous value area high as support. Okay, where we at right now, we dipped below it slightly, but now we're starting to get some bidding coming into the market. If we hold that as support and maybe go in and try to bang out a resistance at 65. So don't be surprised if we get a 10-point range to end the day. In fact, that's what I'm trading. That's what I'm banking on. I don't see a significant move escaping out of 65 or below 50 to 45-ish today. I just don't see it happening. There's going to be a catalyst. If there is, I'll be ready to trade it. I just don't see that happening. All right, let's look at oil, CL1 on TradingView. All right, I've been a firm believer of short oil. I've been long oil at these 43s, shorting it on each one of these highs. Now we're kind of coiling in for a triangle move. There's going to be a big breakout. All right, for those of you that don't know, today's the last day of this OPEC meeting. Absolutely nothing's going to come out of it. All right, the rumors have drummed up interest that there's going to be some kind of production freeze agreement. In oil, you have to buy the rumor, and when the meeting's over, sell the news. Sell the crap out of that thing. And I think we get 43.10. Cautious above 46, though. All right, above 46. Extreme caution because there are going to be some buy stops for everyone that's short through this zone. If you want to get long oil, then wait for some buy stops to come in. Wait for the crazy move. Wait for it to come back down and fizzle and take a shot right there. That's your best high probability chance. The rookies trade breakouts. The professionals trade the retracements and curls. Consolidations and rotations as well. All right. That's what I'm seeing on oil. I don't think anything's going to happen. In fact, there's rumor out there that Saudi Arabia and Iran, the two parties that were always believed to be jeopardizing any potential output freeze, these two didn't even talk. They didn't even meet with each other. Okay, there was no proposal, no backwards discussion. And here Saudi Arabia was saying, we're very hopeful for a production freeze, which caused this rally. Okay, we're hopeful something's going to happen. We're going to do whatever it takes. They didn't do anything. No surprise. Guess what they said? Wow, as we got closer to date, like this is just going to be a consultation meeting. We're not actually going to be here to make a decision. Hey, that's what rallied the market up. You said there's going to be good news. Now there's no news. That's what I mean. Buy the rumors and start selling the news at these 46s. That's how you trade oil. If you're trading it any different, it's got the potential to cause a big mess in your trading account. All right. Now they've pushed it all to November 30th. They said, all right, well, next meeting is November 30th. We'll see what we can do. I'll tell you this much. All the nations that want to freeze, okay, so here's the freeze camp. They say we want to limit supply by freezing output. All the nations that want to freeze supply are the ones that are already pumping at max. All right. And all the nations that are like, hey, wait a minute, this isn't fair, are the ones that still have capacity. Think about what that means. All right. I often use the example of having, way back in the day when you were younger, having a girlfriend take your credit card and you see she's spending $750 a day on it. And she says, hey, you know what? I understand, honey. I won't spend anymore. Or having a boyfriend that's doing that to you, whatever it is, saying, I understand. I won't do that anymore. I've learned my lesson. I'm going to continue to spend just $750 a day. I'm going to freeze my spending. Yeah, okay, that's not a good thing. Of course you're going to freeze your spending. That's a high amount on a daily basis. Same with the oil. The output they're pushing is pretty much the max capacity. So they want to freeze. What does Iran want to do? Well, they've just got off of sanctions. They want to produce more so they could generate revenue. All right, they want to generate revenue. That's the whole oil story right now. That's why Iran does not want to freeze, because they could actually ramp up their output and sell more oil and earn more revenue. Russia, Saudi Arabia, the producers are almost at max capacity. They want to freeze because they can't produce anymore. If they could, they certainly would. And here's the deal with this. Imagine going to small business and doing consulting, saying to that small business, hey, you know what? Your expenses are higher than your income or your sales. Okay, so you're selling, let's say, $100,000 a year and you're spending $150,000. What do you think would happen if you went to that business and said, stop selling? Stop selling. Forget about it. Stop selling. I know that the prices are cheap, but just get rid of the sales. They're going to say, what are you talking about? I got expenses to cover. Of course I'm going to sell. Even if it's at a small loss, I got to continue to sell just to keep my cash flow positive and pay all my bills. Why do you think Iran, Iraq, and all these oil-producing nations are oversupplying? They need to pay their bills. All right? I'm not going to be Gartman here and say oil will never hit a high again, but you know, I don't think we see $100 oil in a long time. In fact, I would say probably $60 at the top of that move, even if they did a production freeze. That'd be the next level up there. Okay, that's enough on oil. Let's have a look at some other peripheral indicators, and then we'll call it a day, and we'll open it up to our trading or earn package subscribers to look at our portfolio and all of our live trades and how we're doing, because we have some exciting stuff going down. All right, darn it, I just missed a nice long on. Actually, no, I'm long the S&P 500. Great. Long a few contracts here. Got them at the 46. Great. I'm happy. 47 quarter, not 46. All right, volatility, what's it doing? It's back into this consolidation range. What's coming up? We got a whole pile of elections. There's going to be a whole pile of debates. We got a vice presidential debate. Then on October 9th, on the Sunday, we got the second round between Hillary and Donald. There's going to be a lot of market movement, ton of market movement. So just hang tight. Don't do anything crazy out there. Don't do anything wild, but understand that we had this volatility pop. I've been writing and talking about this since mid-July telling you guys there's going to be a volatility pop. We traded it. We made some money. Not big, but enough. And then now it comes back down this level. We're looking to buy it again. Looking at gold, GC1. Here's where gold's at. It's holding this 1310 support. It's looking bearish again. And I'm seeing some divergence. Not divergence, but there was divergence that's carrying through. I think the next round at 1310, next time it knocks on this level, it's got to do two things. It's either got to rally and catch a nice bid and smash some of these lower highs, or just give out the support level and try to come back down to about 1270. I'll tell you that at 1270, there's a ton of buyers lined up to get gold, me included. Heck, I'm lined up at this consolidation. I'm lined up at 1288. I'll start picking up some gold. All right, I think gold's going to be a good play for the remainder of the year. I think especially through October, when markets are statistically weak, gold does well. All right, from a seasonality perspective. Any questions from our trading room or midday update, guys? Not trading room, but our midday subscribers. Any questions so far? I'll show you a few trades that I'm tracking with and that I really like. And we won't talk about breadth today. We'll save that for another time, and we'll look at what news is coming up for the rest of the week, and we'll call it a day. All right, here's the trades I like. Love Amazon for a short. I know it's screaming higher, but I love it for a short. I'm short Amazon currently through some spreads. I'm not losing a lot of money on it because I didn't do anything stupid. I kept the size small, but I think we're moving into an exhaustion level here on Amazon, and I think the short's coming. Great. All right, I also have Facebook. I'm short Facebook, okay? I've been short Facebook. I'm looking for some more follow through here to probably get to these 124s. And the other trade is Disney, which I'm long. I'm currently long Disney. All right, and Disney came out with some news that said, hey, well, you know what? We're going to probably acquire Twitter. It's a bit of a head scratcher. Why the heck do you want Twitter as a platform? No clue. But I think we hold these levels as support, these 91s. And my options trade is indicative of that. I think I'm bullish on it. I think there's time. Momentum's kind of coming down to a support level. It's upward sloping. MACD's trying to get excited and cross. Volume on the sell-off has maxed out. So look, we come down. You get a buying rally happening, or buyers start to absorb this 91.50 sell-off. Come back down to it on really heavy volume, and we pause. So I think a lot of people are short Disney. I think it's time for those people to get stopped out. And I'm not saying Disney's going $100. I'm saying let's be smart about this. Let's go 93 as a preliminary target. Let's go 95.50 as a secondary. And ultimate, and this is like really, really ultimate, it's 97 to 98 bucks. Okay, if we get back up there. That's what I'm looking at. And the 100-day moving average catches with 96.64. So in fact, that's probably as high as I'm going to go. 96 is my target on this. The long trade. All right, that's the trades I'm working. If you want to see the actual trades and what we do and how we do it, I strongly encourage you to go to tradeproacademy.com. Become an Earn Package subscriber. It's going to be the best $79 you spend in your entire life on a monthly basis. I always say you spend more than that on your TV and cell phone, and when have those ever made you money, right? So if you go in here, go courses. If you are just starting out, that's not a problem. We got a lot of education in terms of course format for you guys. Sign up. We got a ton of courses. If you're a more advanced trader and want analysis, live sessions, you're looking for trade setups and the midday updates live, that's where you go. It's literally $79 a month. Like, come on. You could see ways to improve yourself to make up for that value very quickly. All right, guys, that's all I got for YouTube. Have a wonderful session further. Be careful. These are the levels you got to watch for on S&P 500. Mark these down for the rest of the session. On the 15-minute, look, there's some supply coming in overhead. They're not letting this thing. There was a bit of a rally on the S&P 500. Here's the market delta charts. We came in, ran some stops, got a few people short, hit the overnight low of 47. That's where I had a chance to snipe along at 47.25, rode this thing up. And as I get off the webinar, I'm going to offer my way out of this trade because I'm long at the moment. I'm still long. I don't know if we break above these volume weight average prices. Okay, I don't know if we do. It looks like a double top. What you have to ask yourself right now is, will buyers step in to defend this 49 even? If they do, we could rotate in between before we break loose in either direction. So watch for rotations. Don't get too crazy. Tailor in your expectations to maybe expect less profit out of your trades, but also take less risk. Because right now I can tell you the way it's looking, look, sell off. We built some value area in here, escaped out of the value area, got bought in very quickly. But now as we head back up through it, 2150, nothing but wicks. Everything's getting sold at 2150. All right, which could actually pressure us to get back down to these 44s, like the 40s we talked about as well, back to this value area. All right, just watch these levels, 2145 on the futures, 2156 on the futures as well. That's where the trading's contained. Buy these dips until it breaks. All right, sell these rallies until it breaks. If it does break, don't get long on the breakout. Wait for it to come back down. Wait for it to settle in. Wait to see some buying support and volume start accumulating, which shows you a price acceptance level, and then get long there. That's how you want to trade this stuff. Okay, last thing we're going to do, last thing I promise, is we're going to look at the economic calendar for the rest of the week, because I don't know if I'm going to get a chance to do any more of these YouTube updates. We got final GDP in the U.S. tomorrow at 8:30 in the morning. Watch for this to be a mover. And we got Fed Chair Yellen speaking at 4 p.m. on market close. Not going to impact the trading day much. I'm out in cash by that for the majority of times. Thursday, that is Thursday. Friday the 30th. Oh, how can I forget? Really big event happening. Friday the 30th, not many U.S. news that are going to really cause massive movement. University of Michigan consumer sentiment might. Chicago PMI might for futures trading, depending on what you're trading. But we're in the last 3 days of the quarter. Did you guys know that? This is the last 3 days of the calendar quarter. There's going to be volatility as mutual funds fight to close out their books. All right, mutual funds are the single largest buyers in the market. Institutions are the biggest buyers. They represent a lot of volume. So watch for some choppy volatility-like action. Don't expect for a massive move to happen out of the gate for the end of this month and end of the quarter. So it comes down here at 40s, they're going to get bought. As it goes up to the 60s to 80s, they're going to get sold. Expect this to go sideways. In fact, I think through October, if we don't get bearish, I don't think October does get bearish unless Donald Trump wins. So I think the next volatility event people are waiting for is the election. And then after that, it's going to be Janet Yellen and the Fed and what they do. All right. And in November, rather, right before the election, there's going to also be, right after the election starts, going to be a meeting for interest rates with no press conference. I don't think they hike until December. And even then, the election will be a much bigger determinant of what happens with who the candidate is than the actual Fed. That's what I believe. Okay, any questions or comments, email us or let us know through Georgia Trade Pro Academy or Info Trade Pro Academy. I'm going to call this a day for the YouTube midday market update for September 28th. You guys come and check us out. We got some free education sign up. And then the subscribers, just give me 1 second. I'm going to end the YouTube broadcast and we'll look at our portfolio. One moment. Hope you guys enjoyed this. I'll see you on the other side. Not the other side. I'm going to be alive, but the other side for the next one. Take care. Have a good day.